Good afternoon. This is Tom Alexander. This is the weekend U.S. stock market update for the week beginning December 8th. It is Sunday, December 7th, as I'm recording this, and we are into December, the last month of the year. This is typically a seasonally very bullish time, in particular, bullish towards the end of December from mid-December on. Now, so where are we here? Uh, we are pressing all-time highs. Everything is confirming this move. The only fly in the ointment here that I see in the very, very short term is that once again we have ramped higher off that late December high, a low into the high last week, but the migration of value is higher. All the indices are in lockstep to the upside. The Dow Jones transportation average is starting to participate to the upside. That has to be considered a bullish event. The internals seem to be expanding. VIX seems to be dropping. So intermediate term, it seems all good. Now, this does not preclude some sort of short-term retracement that occurs. We could accelerate from here. Where we are is we're at very significant inflection points in these indices because all of them are trading at or near their all-time highs. And when you get that, a lot of times what will happen is you'll get some short-term back and forth and and algorithmic games being played up and down across the new highs as latecomers come in and they get stopped out, et cetera, et cetera, et cetera. So could there be some short-term turbulation in here prior to an end of the year ramp? Yes. Do I think we're putting in some sort of significant top? It's not likely. And if we are putting in a significant top, there are levels to the downside that have to be taken out to give any sort of at least initial signal that's occurring. So let's take a look at the charts and we'll take a look at what those levels may be. Okay, I'm starting with the SPX here. This is the profile view of the SPX. And I posted this chart in the member section last week. Uh, Now, what you have here, we had coming into the end of last week, into Friday, we had a multi-day balance area form in the SPX. And I'm just going to combine that trade into the auction that it was. And we had this high volume node. And then we came into Thursday and we came down, tested, actually spiked sharply through that high volume node before trading higher and closing above both the high volume node of the larger structure as well as the high volume node for Thursday. And then Friday, we again, some of the indices traded into new all-time highs. So you got this back and forth up in here. We had a very rotational whippy day, but the index really, the SPX in particular, closed fairly neutral. Now, would it surprise me to see this level tested again? No, not really. Would it be the end of the world if we close below it? No, but it would be something that we, at that point in time, we'd have to take a look at and see what's going on. It could be a buying opportunity. Could we go straight up from here? Possibly, but I think it's more likely that we do some chop and churn and maybe even get some sort of retracement first. And that's not a prediction, it's just an observation from trading these markets for 40 years and analyzing these markets through the lens of how an auction market works. Markets don't go straight up, they don't go straight down. There's a probing rotational process that comes into play in all markets. And we're so far up off of that November 21st low that it would not be a surprise to see a 2-3% retracement off of the high that we formed Friday or sometime soon occur prior to, if we're going to get the big seasonal ramp at the end, the last 2 weeks of the year prior to that occurring. So let's take a look at the bar charts here and we'll just go through them individually. We'll start with the SPX. Let me find my annotated chart. Here we go. So here's that November 21st low. This is the high volume node that I have highlighted here. Now, off the November 21st low, we're up not quite 6% from print low to print high. Now, we traded just above the all-time closing high on Friday and then and then closed lower. Okay, so here's the SPX. Let's look at the NDX. As you might expect, it's in a very similar structural position. And the NDX traded into its gap, but did not close this gap. However, the NDX is up over 8% from print low to print high, from the print low on November 21st into the print high on Friday. And it's again, this has been characteristic of this market since the April low and really since over the past 2 or 3 years, where you have the dip and rip thing. Now, this was a sharper decline than we had seen in quite some time, was way overdue, but we ripped back to the upside. Now this market is topped in a logical level. Would I be surprised to see it close this gap? No. Would I be surprised to see it trade lower? No. That neither of those would surprise me. Okay, let's take a look at the Dow. And the Dow is traded up over 5%. This is its all-time closing high. Is this the all-time closing high right here? Yeah, right here. This is the all-time closing high. We didn't quite get up there. But again, it's the same general structure as we're seeing across the spectrum of the indices. Now let's look at the Russell. Now the Russell has really led the charge higher off this low. From print low to print high, it's up 10%. That's something different this time. Now, it did not quite close at a new all-time high, but last week it did close at a new all-time high on Thursday. Couldn't quite get above it on Friday. But this is pointing to the idea that the market is starting to broaden out, and regardless of any short-term top in here, that it is just that, a short-term top. Now let's look at the equal weight S&P. Equal weight S&P, did it close at a new all-time high? Not quite. It spiked above its all-time closing and print high, but closed just below its all-time closing high, which was made back at the end of October. But it's up almost 6%. Okay, let's look at the New York Composite, the broadest of the indices that we cover. And it also did not, it closed at a new all-time high on Thursday, could not do it on Friday, though it spiked above its all-time high, made a new all-time print high. It's up almost 5% off its low. So that's the picture of the indices. It would be really unusual for a significant top to be made with all the indices pretty much in lockstep at or near their all-time highs. So if anything, we're seeing a broadening out regardless of any short-term retracement in here. If we do get a short-term retracement of 2, 3%, whatever it is, we'll take a look at it at that point in time and see how it fits with the bigger picture. But, can you make the case the market is extended short term to the upside? Very easily. But it's also, I don't like to use the term support and resistance because it puts in our minds as traders the idea, okay, we're at resistance, the market has to come in. No, where we are at inflection points. We could actually accelerate higher from here. I don't think that's going to happen, but it's always a possibility at these inflection points. Okay, let's take a look at the internals. Okay, related on VIX. So the volatility index closed at its lowest level since September. This was September the 26th, and you can see we continue to go higher. This was September the 12th, continue to go higher. Now, there's not it's not an exact correlation causation thing, but a dropping VIX is generally positive for the market. And the VIX has been dropping like a rock since it hit this 25 level back at the end of November as we were putting in this low. Now, at the time, this was the highest VIX had been in a while, though 25 is not that extreme. It's all relative. At some point, VIX will get a lot higher than this, but it gives us an idea about a relative view of concern of the market when it drops. So the next time we get some sort of retracement, we want to take a look at VIX and see how the internal volatility of the market is responding to that drop. So we'll see. Uh, okay, one last thing here. Breadth. Now, breadth is really interesting, and as you might expect, it's showing somewhat of an expansion. The 10-day moving average of NYSE advancing issues, which is the red line you see here, is at its highest level that it's been since last early or late last June into early July right here. And you can see how much higher it went. Now, I've always said this. This view of the market is not particularly helpful in bull trends. It's not particularly helpful at identifying highs. It can be helpful in identifying lows. Back at the end of November, when we were pretty this low, I pointed out that the 10-day moving average and the 5-day moving average were at extremes from where in this rally off the April low, we had seen lows form. That happened again. Now, this could be portending another run up, regardless of any sort of retracement decline that we get in here. So that's what we need to be watching as we head into this first half of deeper into this first half of November. We shall see. If you guys have found value in this, please like, please subscribe, please make comments. It helps with the algorithm as I try to grow the channel. Have a wonderful weekend. I'll be in touch again very soon.